If you're new to trading, support and resistance is probably one of the first concepts you should learn. These simple price levels can help you find better entries, plan stop losses, and decide where to take profits. What is support and resistance? Support is a price level where buyers have repeatedly stepped in. Think of it as a floor that price struggles to break. Resistance is the opposite. It is a ceiling where sellers have repeatedly pushed price lower. How do you draw support and resistance? Look for at least 2 clean touches on a horizontal price level. Don't try to connect highs and lows in a diagonal level because that is trend lines and not support and resistance. Your line or zone can pass through candle wicks. Try to avoid cutting through the candle bodies. And remember, support and resistance are usually better drawn as zones rather than one exact price level. Which time frame? Higher time frames, like the 4-hour and the daily, create stronger support and resistance zones. Lower time frames also have support and resistance, but they tend to produce more false breakouts. How do traders use them? Traders usually wait for price to come to these areas before looking for trading opportunities. Then, when the price reaches a support or a resistance area, they look for a rejection or a breakout, or they use price action to determine whether they have a position. Where do you set your take profit? Many traders place their take profit before the next support or resistance level because price often reacts there. Where do you set your stop loss? Many traders place their stop loss beyond the support or resistance level, giving the trade room to move while protecting against a genuine break. Support and resistance works for Forex, stocks, crypto, and many other markets. It's one of the foundations of technical analysis and a concept every trader should understand.